Good evening and thank you for joining us on the program. It's Capital Market live right here on Channels Television, and I'm Temple Ashaju. Thanks for joining us on the program. Well, the Nigerian Stock Exchange this week announced the appointment of its Cycle 2 product advisory committees across different product lines comprising equities, fixed income, exchange-traded funds, and derivatives. Now, the committees have the Chief Executive of Lotus Capital, Mrs. Hajara Adiola, as the chairperson for fixed income, while the Chief Executive Officer of Codros Capital, Mr. Wale Agbenyogi, heads the Equities Products Committee. Others are the Chief Executive Officer of Financial Products Consulting Group, Mr. Cliff Weber, for ETFs, while a derivatives consultant from the United States of America, Mr. Charlie Robin, heads the Derivatives Committee. And of course, the issue of downstream petroleum sector deregulation is a subject matter that has been on the policy agenda for about 2 decades, if not more than that. And of course, it's still a major decision point for Africa's largest economy at this point. Now, given the changes to ex-depot prices announced for petroleum products earlier this month, and of course, the partial deregulation directives rolled out in June by the Petroleum Products Pricing Regulatory Agency, investors in some of the oil and gas marketing companies listed on the Nigerian Stock Exchange have been speculative about the implications of these price control measures on their companies' bottom lines. Now, while on the program this evening, we will be discussing this issue, having this, of course, as a major conversation with the Chief Executive Officer of Ardova PLC, Mr. Olumide Adeosun, who joins us now to share some perspectives on this burning economic issue. Mr. Adeosun, thank you for finding time to join us on the program this evening, sir.
Good evening. Thank you very much, Temple. It's a pleasure to be here.
Talk to us about this transition of from Forte Oil to Ardova PLC, a journey that began earlier last year, and of course the change of name that started around late last year. What has been the experience like since this transition?
Thank you for asking. It's been a hell of a journey. We have so in December we got approval from our shareholders to change the name. The name was obviously a signal of our intention to focus as much on cleaner energy sources as we have focused on petroleum. In terms of market, the market's been a very strange market this year. Last year we understood it. This year, I think we've all gone back to school in terms of trying to understand how to play the market. Between March and June, we had a very big lull. We lost about 50% of our business, but we're getting back on track, and I think the numbers for July and June, in fact, are showing promise. So we think the second half.
What exactly are the drags that you have to your bottom line? Because I recall that for your numbers for first half 2020 are showing like 1.012 billion naira compared to a huge gap that you have for the base year.
Yeah, you're very well informed, Temple. The biggest challenge I see that we have is really around the cost of sales. As we continue to push volumes and barrels, so we've gone from a 45 million million liter a month company in terms of PMS to a 105 million liter a month company. So when you're trying to push that sort of throughput, there's going to be associated costs that come with it. And the biggest cost that we're having right now is the cost of materials. The cost of our raw materials are still quite expensive, and that's where you see holding back the bottom line.
So a deregulated petroleum downstream environment is what a lot of operators like you really want to see. But is that really what obtains now, given the changes that we've seen in recent time, coupled with the price regulation that we are seeing from PPRA and, of course, PPMC?
Yeah, so the good news was that on the 19th of March, we heard from the government that subsidy was going to be a thing of the past. The reality, and then we got COVID, so we didn't really get a chance to test the market as much. With full movements right now, we're still seeing that there is a fair bit of, the reality is that there's still a fair bit of subsidy, because if you were to price products today in the open market at the price that we are able to receive forex, you will land north of 1 naira. You'll see it at about $1.60 at the pumps. So there is still, in effect, a bit of subsidy, and what's really pushing that is the fact that we don't have a very clear messaging around the pricing template. So the template still holds. The other issue that we're seeing is that there's the access to FX remains the fundamental problem. Quick one. There was a window of opportunity during the lockdown, where the price of oil dropped to such a low point that we're actually able to bring in products, and it was a positive experience. We were able to bring in product. We controlled the price. We brought it in. We controlled the value chain, and we're able to actually deliver cheaper products to people and efficiently as well. So there's room in there, but the pricing and the FX access just don't make it possible right now. So we need the Central Bank of Nigeria and the authorities to provide some support in that area.
So support provision, I mean, the CBN during the week actually announced the commencement of gradual sale of FX now to the BDCs and, of course, all the key actors in the value chain. That is something that should be able to hit you, since, of course, we will be having the reopening of international airspace for international flight operations. What are your expectations from that?
We've been on this since the 19th of March, and we've been hoping that there'll be more liquidity, but it's still a bit difficult. We are hopeful. We like the pronouncements we've heard. We like some of the initiatives that you've just spelled out, but it's just not playing out into practice right now. The economics of importation for a private operator like us or any other private operator outside of NNPC is still very difficult, because we are still, as of today, despite the pronouncements, still limited in how much access we have to FX.
So you just mentioned the constraints of FX, but I am wondering, what are the other constraints that you have around the independent importation of crude oil, of PMS, I should say, premium motor spirit? Because this is something that the PPPRA actually announced a few months ago, as you referenced, that, I mean, independent marketers, major marketers of PMS can actually start importing all of these products.
Temple, it's the economics of the deal. The economics of the deal do not, the economics of import for a private player who has access to FX at 470 does not work. If we did that, then the price of petrol at the pump will be something about, will be short shy of 200 naira per litre. So what we have right now is we have a position where the pump price is still being controlled, and access to FX, which you need to import the product, is still being controlled. So with those two levels of control, you are unable to make the economics make sense. And we can't import the loss. So that's it. I mean, those are the very simple dynamics. If I were to distill the rationale for not seeing players like us importing, it's got to be that. And I'm sorry, it's a very boring proposition. That's really what it's down to. We're ready in every other aspect to import.
So the year 2020 has been described as the year of gas. How do you intend to take advantage of these opportunities in the Nigeria gas deposit, and, of course, the massive investments that we've been seeing from the part of the federal government in that space? Because that is something that at Ardova PLC you also actually deal on.
Absolutely. So, Temple, the year of gas is quite apt, and for us, we're embracing it fully. As you know, if you looked at our financials, you will see that we did absolutely nothing in gas last year. We are looking to focus on really improving our downstream participation in gas. We're going to really reactivate our great network of stations such that they become distribution centers and last mile points of sale for the 100 million or so, 130 million households that are in need of cooking gas. It's a double bottom line effect for us. So on the one hand, you have the fact that it's actually going to be profitable. We see the margins on gas currently look better, but the second aspect is the uptick in socioeconomic benefits and in the environmental benefits as well. You can't quite put a number to it in your financial statement, but environmentally you are doing something very positive. I think we have something like 334,000 hectares of ground crop cover that's being eroded monthly. So this desertification is because we're looking for firewood to cook. We believe gas will go a long way in alleviating those environmental issues and also give people job opportunities and other socioeconomic benefits.
So you just had your annual general meeting. I think that was yesterday. It held virtually, actually. But what are your takeaways from that meeting, and what are the next frontiers for you as a company beyond your venture in gas?
Right. So the meeting was very positive. This is my first post-COVID AGM. It was very light in terms of footprint, but the intensity that you get from your shareholders was still very much there. The big takeaways for me was that I think our shareholders are starting to see that the strategy they approved last year is starting to gain legs, and is starting to gain some traction. My biggest takeaway from it, in terms of what we need to do, is that we need to continue with the threefold strategy we adopted when we took over, which is that we need to sweat every single asset we have. We need to look into diversification. So diversification for us extends beyond gas. It's really about looking at the entire renewables basket and seeing what we can do there. The cheapest feedstock we can have right now as Nigerians is sunshine, and it's there, it's free. The technology to convert it into energy is getting cheaper by the day. So I think it would behoove us not to use, again, this very vast nationwide network of stations that we have to provide the same level of excellent customer service to people who buy traditional fuels, and to those who buy lower carbon fuels like gas, and to customers aiming at those at the lower end of the demographics, to provide affordable renewable solutions to households. So that's really what our focus is going to be for the coming year or two.
So, Mr. Adeosun, across your outlets, you're selling PMS now at 148 naira 80 kobo thereabout. How much will this price contribute to your bottom line for the year 2020?
I beg your pardon. How will this price work for us?
What will it contribute to your bottom line eventually? The price of petrol at 148 naira 80 kobo.
You know, Temple. You know, it's a moving target, Temple. It was something else last month. It was something else the month before that. So it's very hard to plan when the price is so dynamic and it's so volatile. But from the little we've seen, we remain on track to meet our budget for the year as far as PMS goes, and that also factors in COVID. So at the start of Q3, we're still very much on track. So for as long as the decision makers around pricing continue to really follow the external market, and they allow the market forces to determine these prices, we will be on track to have a reasonably good year for our shareholders.
Just before I let you go, Mr. Adeosun, I know that your debt exposure as at Q1 this year was reduced from 8.3 billion naira to 5.3 billion naira. With COVID-19 around now, how much will you be able to achieve, given your target of a single-digit debt exposure going forward?
I think it's still very doable. The best thing that happened to us is that movement is back on. As you know, we make about 80% of our revenue from the sales of PMS, but we also have other higher margin items. Our lubricants business. We are distributors for Texaco in Nigeria, and our own homegrown grades, Visco 2000 and Super V, are doing well in the market. So we think that the collusion of the continued improvement of margins in PMS, we would love it if we started to control the value chain ourselves from coast to customer. So we do our own importations. That means that we can actually afford to fine-tune efficiency across the value chain. So we're really hoping to see that happen with increased volumes in lubricants. We think we will be able to meet our targets vis-a-vis single-digit debt by year end.
Mr. Lumide Adeosun, the Chief Executive Officer of Ardova PLC, former Forte Oil PLC. Thank you for sharing your thoughts with us on the program. Thanks for making our time for us on the program this evening. I appreciate your insights, sir.
Temple, it's been a great pleasure. Thank you very much, and I look forward to being back on the show soon. Thank you.
Thank you so much, sir. Well, after the break, we'll take a look at the implications of the CBN's foreign exchange policy for the securities market. We're back in a minute. This program is Capital Market and is live on Channels Television. Welcome back from the short break. Well, the CBN this week announced the decision to commence a gradual sale of foreign exchange to licensed bureau de change operators with effect from August the 31st, 2020, and that's just next week, Monday. And as part of efforts to enhance, as part of its efforts to enhance the accessibility to foreign exchange. But an applicable exchange rate for the disbursement of FX through the value chain was also announced. And of course, here now, we know that all of that will be bringing about some changes in the capital market, especially given the fact that you have a lot of FPIs, offshore investors, that are yet to be repatriate their funds from the domestic market here. And also help us understand the implications of these measures for the capital market is the head of research at United Capital, Wale Olusi. Wale, thank you so much for joining us on the program this weekend, albeit it's happening via Skype.
Thank you for having me, Temple. It's a pleasure.
Great. Okay, so before we go deep into the conversation, tell us what was the week like for you in terms of equities trading and, of course, the debt and currency side of things?
Well, I mean, I think it's a good week for stocks or equities. I mean, it's been ticking up, gradually. The market, shook off the GDP numbers on Monday. I mean, actually reacted positively. And in the debt market, the story has not really changed. Yields are very low, so investors continue to take what they have that way.
Okay, so we all know that the CBN has now announced the gradual sales of foreign exchange to licensed BDCs, to banks. They've given different rates from International Monetary Transfer Organizations, IMTOs basically. It's going to be 382 Naira. Banks to CBN will be 383 Naira. CBN to BDCs, 384. And of course, BDCs in turn to end users will be 386. Basically, there's a cap. Now, what will this mean for the capital market, securities at large?
Well, I mean, I think it's largely a positive development. Is it's little. I mean, it's not enough. If you compare how much central bank was selling to BDCs before now at about $75,000 per week, compared to between 10 and 20, it's a little bit of improvement. We're expecting parallel market rates to also improve slightly. For stocks, we are not sure it's enough to bring back the foreign portfolio investors. But for the locals, I mean, since, they signal this as a positive news, we think, that should cheer them up a bit and support the, mildly bullish momentum that we've seen lately.
Now, when you say this won't bring back these offshore guys, what do you mean? Why won't it bring them back?
Well, I mean, the selling FX to BDCs does not completely, answer the questions they are asking. They want to know what will happen to the backlog of FX. For many of them, between 2 billion and 5 to 7, we are not sure the actual number, but we know that there's a huge backlog. There's also the problem of the spread between the parallel market rates and the official market. Basically, there's the question of liquidity. If you pay the backlog, if you start selling to BDCs, where is the supply going to be coming from? Nigeria sells majorly crude oil, and crude oil is around $45 to a barrel. OPEC has capped Nigeria output at about 1.8 to 1.7. It doesn't look like we're going to be getting a lot of inflow, except the CBN is going to do something really interesting. They need to be sure that they won't be trapped here once they come in again. So I think those are the key issues that the foreign portfolio investors are looking at. They care about the size of the reserves and stability or the liquidity of the market.
But Nigeria doesn't seem to be alone in this particular issue because, again, there is a report coming out this weekend from the Institute for International Finance that says about the same thing, especially about the emerging markets, where some $90 billion outflows has now outweighed inflows since the pandemic actually started earlier this year. But let's leave that now. Talk to us about how this explains the capital importation report that was released by the NBS yesterday, where, of course, for the very first time in a long time, other investments actually outweighed FDIs and FPI? Because all along it has always been foreign portfolio investors that drive capital flows in this country.
Well, I mean, I'll just pick it up from where you stopped earlier, talking about other countries and emerging markets, and link that up to the foreign capital, capital importation report. If you look at what has been happening, in the last, 5 to 6 months, most countries have been benefiting a lot from inflows from the likes of the IMF and World Bank. So those kind of loans actually account for the bulk of most capital importation into a lot of economies. In terms of FDI, I know, no serious investor is looking at any country that, there's a lot of economic instability now. And even before coronavirus, there are concerns in countries like Nigeria. For FPI, where they are going is, into safe areas. If you look at the US market, is on all-time high. Look at the tech stocks. Gold prices are, considerably high now. Those are where they are more comfortable at, basically because of the uncertainties in the economy. And I think that's what explains Nigeria capital, importation reports. If you look at the size of our exports, the size of FPI that are coming in between Q1 and Q2, they are not coming in as much again. And then FDI is not even anywhere to write them about. So everything still links back to the pandemic.
Okay, so let me take you back to the weekly report. Activity level weakened by some 48.6% at the investors and exporters window this week to settle at $163.2 million from the previous week where we saw $317.4 million. And of course, I think it was 2 weeks ago or last week, we suddenly saw a surge at the INE FX window, and that was like the highest in the last 7 to 8 weeks. Now you're saying that you do not expect the supply side to be answered enough for of FPIs to be able to repatriate their proceeds in the market. But do you think we will continue to see more interest in the FX futures contract space as we've seen this week, where we have more interest or new subscriptions in the December 2022 paper and of course the December 2023 paper? And what does that mean for us at large?
Well, I mean, whatever happens at the I&E window, at the end of the day, ultimately depends on the kind of announcement or reforms or, the direction that the central bank gives. That market is supposed to be an autonomous market, but at the end of the day, central bank appear to be one of the biggest player. What the central bank has done, however, in this week that we are concluding, is to persuade exporters who are also a major player. Remember, it's importers and exporters window. Central bank is persuading exporters to repatriate their capital, basically to create liquidity in that market in the absence of enough participation from the central bank. I mean, if that works, maybe we will see some activity. Another thing we should look at is central bank did something to form LCs and
Exactly.
earlier in the week, basically to limit the issue of over invoicing and all of that. Of course, there are pushback. The manufacturing associations are, but we think there will be engagement and there will be some level of coordination in that space that will allow stability return and activities come back. For the forward market, really, I mean, it depends on what is available. If people think there's still a lot of on the FX in the future, then future prices of FX will continue to be priced at a premium. I mean, there's nothing you can do to that, because for FX in Nigeria, it takes a stepwise model. So it looks like every 3 years something have to happen that will push up, the price of naira compared to the dollar. So, those are the issues guiding what is happening across this market in our view.
All right, Wale Lucy, the head of research at United Capital PLC. Thank you so much for sharing your thoughts with us and making our time, of course, with us on the program this weekend. We appreciate it. Thanks a great deal.
Thank you. Yeah.
All right, just before we go, 2 earnings that you should watch. That's University Press PLC for the 2019-2020 numbers. Of course, their revenue was $2 billion for this period under review. They're paying out a total of 65.71 million naira in total in dividends, and of course qualification date September 25, 2020. Payment dates is sometimes in November. Red Star PLC, Red Star Express, of course, also has its 2019-2020 financials out. Revenue 10.54 billion compared to 10.06 billion naira. They've got an impressive bottom line, 468 million naira, and of course dividend is 35 kobo. Coming to a total of 324 million naira, and of course qualification date is also September 18, 2020. That's a space to watch, of course, in the Nigerian capital market. Well, that's it on the program this weekend. Thank you for being a part of it. I'm Temple Ashaju. Hopefully, I'll see you next time. Bye for now.